Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that massive pump on the Bitcoin chart. Guys, we were calling it here first when people were suggesting that we were likely to be having an accumulation wedge that would just gigapump to the sky, or that there would be a double top that would take us down to perhaps even the 40K area. This is what I was saying here at Alpha Commission. Really, what I'm going to be paying attention to is whether or not this was kind of a distribution setting up a creek, right? And then I'm going to look to see, are we going to jump this creek and then, have signs of strength? And this would be a clear Wyckoff pattern that would be reaccumulation and could take us massively to the upside. Okay, guys, so you can see what in my heart that I was looking for. Of course, we do have to entertain all possibilities, so we set critical levels that if we did hold those critical levels on the weekly and the 3-day, this was a couple weeks ago, right, April 11th, that could have, of course, sent us just from where we were, but more likely we were going to fail that as we were underneath the 3-day pivot, test our lows here, perhaps dipping below the bear zone, and then I was pointing to this kind of 58, 57K level, which then we would have to show signs of strength to get out of, and of course I titled that episode Wyckoff patterns form, and altcoins bleed, right? I was giving you the heads up at 71K that altcoins were going to be bleeding heavily, and that of course this was a potential Wyckoff that would have to go into some distribution and a manipulation before we could pump to heaven. Guys, so you got the straight alpha here first. Now let's check out what I was saying in the last episode, as I was pointing out this rising wedge that was breaking down inside of that Wyckoff pattern that we had. And of course, I had some measured moves. You can see these white dotted lines where I was targeting this circle where price action had not reached yet, all the way down to around 56,000 ish. I was suggesting that we were going to perhaps break down there. It's kind of hit or miss. It's not something that's perfect, but in a falling wedge, we very often see a deviation to the bottom side, which ends up being a fake out. And if you can recover the wedge, right, if you can recover the wedge, this is the point that you want to get in at, because oftentimes that recovery comes to explore the top of the wedge, and then you get the breakout, and sometimes you retest the wedge or something like that, and then off you go, right? Perhaps back to your local highs. So, okay, guys. So as you can see that after that rising wedge, which did break down bearishly, I was proposing that it was likely to set up a deviation that could be reclaimed by this falling wedge that I was hypothesizing here, that then could take us to show those signs of strength in the Wyckoff pattern that we're potentially forming here. Now, guys, I know that there's a lot of even professional traders, surprisingly enough, who've traded for many years, who constantly just poo-poo patterns. But guys, you have to understand the importance of wedges, the importance of triangles in trading, and the reason why it's so important, and I teach this in my course, guys, is that if you are trying to capture volatility, right? Because it's not just price action. Obviously price action is king, but if you're trying to capture volatility, you want to make sure that you're paying attention to how these wedges are setting up, because how wedges set up really can give you a strong bias on volatility, which in its nature is random. And so if we're using, just multiple factors like price action, momentum, and then also volatility, then we've pretty much encapsulated all of trading in those three aspects. And so I really don't understand why traders put down patterns. In the beginning, I used to be one of those guys because I learned basically by watching some professional traders and dissecting their techniques. And what I found is that that bias that some of them have against patterns is unfounded, especially in crypto. And so if you hear that, a lot of times these guys are selling indicators. They're trying to sell you something that makes you reliant on them. And so if you're using patterns, that doesn't make you reliant on them anymore. And while patterns are not 100%, they may have a statistic associated with it. For example, a 70% statistic to break to the upside. It means a 30% chance of failure, but it's still better than just hit or miss or flipping a coin, right? And that's the kind of advantage that you want in trading. So, of course, I do emphasize these patterns these days. You will recall, if you've been with me like 3 years ago, I used to be against patterns, but I had to change my mind. When we have evidence that's contrary to our bias, we have to change our mind, okay? And so, guys, I understand that some people are dead against patterns. They're dead against diagonals. They just want to see horizontals, and that's fine. If it works for them, that's fine. You should stick to the strategies that work for you and make you money. But the reason why I do this type of Wyckoff analysis, the reason I do wedge analyses, is because it works for me time and time again. And as you can see, in the results on the Bitcoin chart, right? This prediction that I made of this falling wedge, just based upon pattern statistics and where we might get a nice entry and some type of a validation of our thesis here, is if we come back and retest the bottom of this wedge. So let's go over to the current price action. And let's take a look at what's going on here because we do have that deviation underneath our horizontals. We are reclaiming our horizontals. And so if you want to trade on a horizontal basis, this is just fine. But that target in the middle of nowhere was derived from our patterns. Okay, guys? The concept of what we're doing is being derived by patterns. Now, if we go ahead and take a look at that rising wedge, it had a measured move that was hit almost precisely, and now we're finding the reaction off of it. And of course, if we're going to take a look at our falling wedge, then here you can see the fake out, as I said in the video, and then we got the push back up into our wedge, and look at where we got a little bit of a slowdown right at the top of that wedge. And so just because some people don't know how to draw patterns precisely, they don't know how to use little buffer room areas on these zones, that shouldn't deter you from trying to use patterns just to eyeball the type of price action that you might be getting here. Because as we can see, if we're running into a little bit of resistance, most likely we're going to have a pullback in this area, and that's where we want to see, did we recover strength? Right? Did we recover strength in this pattern? And if you were just using level to level, you might just be looking up here for your resistance, but this pattern is showing us that you're going to have a little bit of resistance, perhaps in the next, move or so, where we might just have a little bit of a pullback, try to find some strength to finish our move here, and then that's going to give us a good understanding of whether or not we're likely to have a breakout. And should we get that breakout, of course, as I mentioned in the video, we could have pullbacks again, and this could all take a very long time before we get any particular height out of this bullish formation. But, so sideways is still potentially the name of the game for a little while longer, which is good. It gives us time to get into our positions. But as you can see, that you would have wanted to enter on the re-entry of this wedge. Okay, that's the advantage that you get in using this type of analyses, is that if you broke down from that wedge, you have an opportunity to get in when you reclaim the wedge. And if you're not thinking like that, right? If you're not thinking like that, you should really try to incorporate it a little bit more into your strategies, because it's basically the same thing as if we had just broken down here And then we recaptured a certain level, right? And then what we would be doing, we'd be targeting the resistance next, except in this case the wedge gave us precise points to be looking at, the standard deviation to the downside there, and then also this potential rejection area, just temporary rejection, nothing too serious, and then the pullback where we're going to be looking for strength. And that's the advantage that you get from these patterns. That's why I put a lot of work into it. And so it's a little bit disheartening to hear, some of your hero traders, putting down your strategies when in fact you maybe even have learned from them in the past, and they just don't think very critically about these things, because there are statistics that go along with this. And if we're going to be statistics-based traders, then we want to understand that this type of pattern does have an approximately 70% hit rate, and that's a very strong showing in trading. So this is what we're going to be looking forward to. And should we lose this wedge, right? Should we lose this level, then we might be looking lower, perhaps even to the 200 EMA, right? And things could get quite dangerous under that area. But for right now, everything is looking pretty good. Let's go ahead and take a look at what our old pool was. The old pool, I was telling you that if we lost that volatility pivot at 62,900, we were likely to just chop around in the bear zone. We did chop around in the bear zone. We pushed out of that bear zone, and look at this. Lo and behold, we're just testing that add and lose momentum level. We're not quite getting that hold momentum level, and we retested that volatility pivot a little bit strongly. Okay, we did close at it, and we're currently pushing above it, which is a good sign. But because of the nature of this shakeout, we actually have new levels that we can apply. So if we do apply those new levels, you can see that we're in a much stronger position before. As we have drawn down, the chart has been able to reset itself, and so a lot of our indicators are going to be showing that strength in the move can come a little bit sooner than some people might have been expecting when we were thinking about this level. Well, we pushed down into this level, and so that has just modified our perspective here. And what we can see is that really, as you would expect, level to level, that our volatility pivot is now around 59,875. If we lose that, probably we're going to have a bias to the downside, especially if we get lodged underneath 57,900, which is our new bear zone thanks to these wicks over here. And if we do want to just add momentum to the upside, we're going to have to close the day above 60,950, which we are pretty much ahead of here. So if we do have a pullback all the way into that area, no harm, no foul. This area is totally open for us to explore. But of course, if we end up closing the day above 62,915, that's going to be a very strong showing, and we could potentially even have a squeeze up to our big alpha energy area, which is going to show us the strength of the move here. If we take out this high somewhere around 67,250, putting in strength there, our weekly and 2-week volatility pivots have also come down thanks to this shakeout. And so really we just need to secure 70,380 in order to show that strength on the weekly. The weekly does close in about a day, so does the 2-week. And to get the 2-week volatility pivot, that's going to be 72,525. And the bull zone on the daily is actually in between them. So should we just rocket up into that area, then we could just perhaps continue to keep flying. Should we close the end of the week above this area, everything will be super bullish. We will have that big alpha energy behind our back, right? And this thing could just go like just to the moon, guys. But the thing is that that's not usually how it works. And so if we do get a little bit of a drawdown, just maybe even retest that pivot, kind of retest our wedge, play around in this area, hopefully make a little bit of a higher high here and a higher low, and then we grind our way through this over the next couple weeks. That would also be equally as strong and perhaps a little bit more healthy for the charts as well. Of course, we do have to take a look at at the bear side. Should we lose that volatility pivot, then this was just all for naught. And if we get stuck under that bear zone, then we do have this potential squeeze to the downside, which could be quite devastating for this market. And it could even be the end of the market, guys. So I think I'm going to leave it there. That's your alpha for the day. Stay safe and happy trading.